There is one uncomfortable truth about money that most people never hear in school, never hear from their parents, and rarely hear from their friends. People who work hard, wake up early, pay their bills on time, save diligently, and do everything right, according to the traditional script, often end up losing money. Not on paper, not in some abstract way, but in real life. They lose years of effort and still feel financially stuck. For a long time, I was exactly that person. I believed that if I worked hard, avoided trouble, saved what I could, and stayed out of debt, everything would be fine. I thought that was the path to financial security, and maybe one day, if I was lucky, a comfortable retirement. That is what society teaches. Work, save, be modest, and the system will take care of you later. But reality was different. I felt like no matter how much I tried, money kept slipping through my fingers. I earned something, paid all the right bills, did my best not to waste, and still ended up stressed at the end of the month. When I managed to set some money aside, something always happened. A new tax, an urgent bill, a medical expense, car trouble, an unexpected payment. The money disappeared as if it had never existed. At some point, I had to admit something painful. It was not only about my self-control. It was not because I was lazy or irresponsible. The game itself was set up in a way that guaranteed I would always stay on the edge unless I learned the real rules. The system is designed so that if you only work for a paycheck, pay taxes, take on consumer debt, and rely on savings accounts, you will be running on a treadmill for life. For a long time, I believed that the formula for success was simple. Get an education, get a good job, work hard, save, avoid risk, pay off your mortgage, and hope that pensions and Social Security will be there for you. My parents believed in that. My teachers believed in that. Many people I respect still believe in that. But when I looked honestly at how this formula worked in real life, I saw something else. I saw people reaching midlife exhausted, with almost no assets, no real safety net, and no freedom to stop working even for a short time without panic. So I asked myself a brutal question. If I stopped working right now, for how long could I live exactly as I do today before everything collapsed? Not in theory, not, I could tighten my belt, but realistically. How long could I pay rent or a mortgage, utilities, groceries, healthcare, transport, and basic needs without new income? The answer shocked me. I could last only a short time. That was the day I finally understood something important. I did not have security. I had a job. A job is not security. A job is a single point of failure. If one company or one person can send you a message and instantly cut off the money that feeds your life, you are not safe. You are dependent. To change that, I had to understand what exactly I was doing wrong with money. Over time, I discovered that most people make two types of mistakes. There are tactical mistakes, the everyday errors in how we manage cash flow, expenses, and small decisions. And there are strategic mistakes, the deep errors in how we think about income, risk, time, and the purpose of money in our lives. I made both. One basic tactical mistake was not tracking anything. I thought I more or less knew my income and expenses. I told myself that I was not reckless, that I did not overspend on luxury, that I was reasonably careful. Then I forced myself to sit down, open my bank statements, card history, and receipts, and look at several months line by line. It was painful. I saw ride shares I took just because I did not feel like walking or using the bus or subway. I saw food delivery and takeout because I was too tired to cook. I saw monthly subscriptions I had forgotten about. I saw random online orders, micro purchases, small weekend rewards that I justified as harmless treats. Each one looked innocent. Together they formed a steady leak that quietly drained a huge part of my income. It was like having a small hole in the bottom of a boat and pretending it did not matter. One hole is nothing. 10 holes and the boat still floats. Hundreds of tiny holes, and one day you realize you are already too low in the water. The second tactical mistake was allowing constant cash gaps. I would get paid, pay rent or mortgage, pay utilities, pay some debts, relax a little, and then suddenly new charges appeared. Taxes I did not plan for. An annual insurance payment I forgot. Car repairs, medical expenses, work-related costs. I realized I was always one step behind. My reaction was the usual one. I filled the gap with debt. I used the credit card, an overdraft, a personal loan. And of course, that debt came with interest, fees, and stress. So the next month started worse than the previous one. That is how many people live. Technically, they have an income, sometimes a good income, but without structure, and planning their money is always in crisis mode. There is no margin, no cushion, no calm. I was stuck there too, until I admitted that my way of handling money was the real problem, not fate, not bad luck, not the economy alone. At the strategic level, my mistakes were even more dangerous. First, I assumed my income was fixed. I behaved as if my earning power was a given, like the weather, something I could not change much. So my focus was only on cutting costs wherever possible. I believed if I just reduced enough expenses, everything would be okay. That mindset has a hard limit. You can only reduce expenses so far before your life becomes miserable. There is almost no limit to how much you can grow your skills, your value, and therefore your income over time. There is a quote often attributed to wealthy business owners. Do not be afraid of big expenses. Be afraid of small income. It is uncomfortable but true. A person can obsess over saving a few dollars on coffee, while losing thousands over their lifetime by staying underpaid, underskilled, and underdeveloped. At some point, I decided to switch the main question in my head from, how can I spend less, to how can I make more while also spending smarter? That led me to learn new skills, consider new sources of income, and think more like an owner instead of a permanent employee. Second, I believed I could save my way to wealth. I thought that if I just saved enough money in a bank account, this would eventually make me financially free. Saving is important, but I discovered that simple bank saving is not a wealth-building strategy, especially over decades in an environment where inflation constantly erodes the value of cash, and where governments and central banks can expand the money supply with a few decisions. Leaving all your money in a basic savings account is like trying to run up a down escalator. You move, you get tired, you sweat, but the staircase moves against you. Little by little, prices rise, currencies lose purchasing power, and bank interest often stays below inflation. The number on the screen might grow slowly, but what you can actually buy with that number shrinks. The strange result is that you have more money and less power. That is why wealthy people do not rely on savings accounts for growth. They use them as a parking lot, not as a destination. Real financial growth comes from owning assets that tend to appreciate and generate cash flows. Businesses, real estate, broad stock index funds, parts of productive companies, real assets. This is where the difference between assets and liabilities becomes crucial. An asset is anything that regularly brings money into my pocket. A liability is anything that regularly takes money out of my pocket. It sounds simple, but in practice many people confuse the two. I did too. For example, I used to think that the house or apartment I lived in was always an investment. It felt logical. That is what people say. Your home is your biggest asset. But when I looked carefully, I saw the reality. The place where I live does not pay me. It charges me. I pay mortgage or rent, taxes, repairs, insurance, utilities, maintenance, furniture, upgrades. It might rise in price over long periods, but month to month it is a cost. Now, if I own a property that I rent out, and after all costs, it still produces positive cash flow, that is different. That can be an asset. If I own a share in a business that earns profits and pays me dividends, that is an asset. If I own index funds that represent thousands of companies and share their earnings with me, those are assets. The key shift for me was this. I had to stop working only for money and start letting money work for me. That does not happen magically. It starts with small choices. Instead of spending every extra dollar on lifestyle, I began to regularly direct a portion into assets. At first it was uncomfortable and almost symbolic. Tiny investments, small positions in index funds. Later, a simple rental unit. None of it was glamorous, but each move slightly increased the amount of money that worked while I slept. Then there is the seductive idea of passive income. The phrase sounds beautiful. People imagine money flowing in endlessly while they sit on a beach and do nothing. This dream is used aggressively in marketing. Invest here and get passive income. Join our platform, earn high monthly returns automatically. Buy this course, this algorithm, this robot, it will trade for you. I had to learn the hard way that there is no free, safe, guaranteed high passive income. There is either a realistic return with real risk that you understand, or a promise that hides something you do not see. I saw many offers. New companies, websites, trading systems, shiny apps promising generous fixed percentages every month. At first, some of them seemed to work. People showed screenshots of profits. Social media was full of excitement. Then withdrawals started taking longer. Conditions changed. Support went quiet. And suddenly the whole thing collapsed. That is the classic pattern of schemes built on fragile or completely fake foundations. I decided to create a personal rule. If someone promises me a return that is far above what established markets offer, with almost no risk and no effort, I treat it as a big red flag. If I cannot clearly explain where the profit comes from and who pays it, I walk away. If the main argument is urgency and fear of missing out, I reject it. I am not interested in miracles anymore. I am interested in math and transparency. While all this was happening, I also had to face the emotional traps around money. Many people live above their means not because they are evil or stupid, but because they are chasing other people's approval. They finance big weddings with loans, cars they cannot truly afford, vacations that exist mainly for social media. They want to look successful, even if it quietly destroys their financial health. I know this feeling. When I started earning more, I thought I had to look the part. I spent on things that made me feel important in the eyes of others. A nicer car, a more expensive apartment, upgraded gadgets. None of those things made my life more secure. They made it more fragile and dependent on constant high income. Another psychological trap is refusal to learn. Many adults secretly believe that because they are older, they already know enough. Learning about money, investing, taxes, risk, and assets feels boring or threatening. It forces you to admit that your current model may be wrong. It wounded my pride to realize that people I considered less educated than me often understood money better because they had practical experience and the courage to ask questions. Wealthy people I studied did not know everything, but they had one common trait: they kept learning. They read, took courses, asked questions, made experiments, made mistakes, and learned from them instead of pretending they were perfect. They treated financial education as a lifelong process, not as a one-time event at school. I also looked at the environments people chose for themselves. When I spent most of my time around people who constantly complained about the economy, the government, bosses, and rich people, I noticed something. Nothing changed. We could have the smartest debates about how unfair the world is, but at the end of the day, nobody had built anything. When I started visiting different environments, business events, online communities about investing, meetups where people discussed projects and opportunities, I felt uncomfortable. I was afraid of being rejected or judged. But I gradually realized that new connections, new conversations, and new models of thinking were exactly what I was missing. Not every contact became a partnership, but enough of them opened doors I did not even know existed. Time was another huge blind spot. I used to waste hours every day on meaningless content, random scrolling, gossip, entertainment that gave me nothing lasting. I told myself it was rest. In reality, it was escape from stress and responsibility. My time, attention, and energy were leaving me every day with no return. At some point, I decided to treat my time like capital, just like cash. I asked myself regularly, what did I invest my time in today? Did I feed my brain with something that will help me create more value? Did I practice a skill? Did I build or maintain an asset? Did I deepen an important relationship? Or did I just numb myself? This does not mean I never relax. It means I no longer pretend that all hours are equal. Some hours move me forward. Some hours keep me stuck or move me backwards. Wealthy people tend to protect their time like a valuable asset. People who stay broke often give their time away cheaply to distractions, drama, and things they will not even remember a week later. Another deep difference I noticed is how people react to problems. When something went wrong in my life, my first reaction used to be to search for someone to blame. The economy, the government, the company, my boss, my family, my childhood, the weather, anything. This gave me a brief emotional relief. It also made me completely powerless. The moment I decided to accept responsibility for every outcome in my life, even when it was not entirely my fault, things began to change. Instead of asking who is guilty, I started asking what can I do differently next time so that this does not happen again. That question is the seed of growth. It does not deny that external factors exist. It simply shifts focus to what I can control: my decisions, my knowledge, my habits. Many people underestimate how much stress comes from money. Studies in the United States show that a strong majority of people list money as the main source of stress in their lives. It affects sleep, health, relationships, and mental well-being. But the root of that stress is rarely just not enough income. The root is feeling out of control, not knowing where the money goes, not having a plan, not having reserves, not understanding the system, and not seeing a way out. When I realized this, I stopped expecting the system to save me. I stopped waiting for governments to magically fix inflation or guarantee my retirement. I stopped believing that employers would protect me in every crisis. I accepted a simple idea: nobody is coming to rescue me. Financial education is my responsibility. Building assets is my responsibility. Creating multiple sources of income is my responsibility. The good news is that I do not need to be born rich to do this. Many people who are financially free today did not start with wealth. They started with a decision to learn, to take responsibility, to invest time and attention into understanding money, and then slowly into building assets. My own path was not clean and glamorous. I made mistakes. I invested in things I did not fully understand and paid for it. I started a business that looked promising and then failed. I trusted the wrong people a couple of times. I had months when I felt stupid and discouraged, but each failure left me with more knowledge than before. Each mistake taught me a rule I will never forget. Over time, small changes added up. I built an emergency fund so that one surprise would no longer destroy my month. I cut unconscious spending leaks. I set clear financial goals with timelines instead of vague dreams. I began to build a portfolio of simple, diversified assets instead of chasing hot tips. I invested in skills that increased my income. I learned basic tax rules to avoid overpaying. I improved my environment, my habits, and my relationship with risk. I am not saying this to claim perfection. I am saying it to show that financial freedom is not a magic secret. It is a process. It is a series of decisions. If you feel stuck, I invite you to ask yourself a few questions. Do you know exactly where your money goes each month, or are you guessing? If your main source of income stopped today, how long could you live without changing your lifestyle? How much of your spending is about impressing others instead of serving your real values? How many hours per week do you invest in learning about money, investing in assets, compared to how many hours you spend consuming empty entertainment? How often do you blame external forces for your financial situation, and how often do you look honestly at your own decisions? Your answers are not grades. They are just a mirror. They show where you are starting from. The important part is what you decide to do next. You do not have to become an expert trader. You do not have to predict markets. You do not have to take crazy risks. But you do have to accept that the old script of work, pay bills, save a little and hope is not enough in today's world. Real security and real freedom begin when you stop working only for money and start building a life where your money also works for you. When part of your income goes into assets that produce future income. When you know exactly how your financial system functions. When a surprise bill is an inconvenience, not a disaster. When your future no longer depends entirely on the decisions of one employer or one government. I do not promise that this path is easy. It requires honesty, discipline, and patience. It requires learning things that may feel unfamiliar at first. It requires saying no to some short-term pleasures in order to gain long-term freedom. But I can tell you from experience, it is worth it. There is an invisible prison many people live in. Its walls are not made of steel. They are made of paychecks, debt, fear, and ignorance about money. The door of that prison is unlocked. Most people never walk through it because they are too busy running on the treadmill inside. If you are still listening to me now, it means a part of you already feels that something is wrong with the standard story you were told. That awareness is the key in your hand. What you do next is your choice. You can keep playing the same game and hope for a different result. Or you can change the game, step by step, and build a life where you control your money instead of your money controlling you. Thanks for watching. Please like if you found this helpful, leave a comment, be sure to subscribe, and share this video. You can find useful links in the video or channel description. See you soon.